there. Thanks for joining us. My name is Jamie King. I'm with Team Z and Active Realty. Today we're going to be talking VA loan programs with my friend and associate, Ron Berg, Senior Loan Officer at People's Mortgage. Hello, Mr. Ron Berg. How are you today?
I'm doing well, Jamie. Thanks so much for having me.
Oh my gosh, thank you so much for your time. I know it's a little strange with this format as we do share a wall here on Voltaire and Ocean Beach, so to be on video is a little weird, but hey, we're making it happen, huh?
Right, part of the new way of doing business, but hopefully not for long.
Great. So I think we should just jump into it here. As far as the VA programs, it's kind of been a big year for VA starting out 2020, right?
Certainly, yeah, a lot of big changes for the benefit. VA used to have loan limits that followed the county conforming limit. So San Diego County, currently at 701,500. If you were to, before 2020, take a loan amount north of that number, you have to bring in 25% of the difference. So if it was an $801,000 purchase, you would be bringing in $25,000 for your down payment. They've done away with that as of January 1st, 2020. So no more loan limits, which is great.
Oh, that's awesome. That opens up the door for so many families to take advantage of the VA program, right?
Absolutely, yeah. So, a lot of times that's the biggest challenge for purchasing a home. It's really coming up with a down payment. And so that's one of the great benefits of VA loans. You don't have to worry about, the purchase price and calculating the difference. And their interest rates have always been historically lower than all the other products out there. So it ends up being one of the better programs as long as you qualify for it.
Right. And if you do qualify, why not use it? No brainer.
It's no brainer, absolutely.
So what's the entry level FICO score for VA? What are the qualifications beyond having served in the military or active?
Sure. Good question. And, things have changed with COVID. So we have to always adjust as the market changes. Pre-COVID, you'd be able to get a VA loan with as low as a 580 credit score. But currently, you need a 640. And that may change in the near future, but for now, if you don't have the 640, one of the things we offer at People's Mortgage or, another loan officer you work with can hopefully help get your credit scores up. But you really want to target for 640 to at least get you in. You will have more costs associated unless you can get your score over 660. So that's really the new target that we really try to get our clients into to get your closing costs reduced versus a 640 to 659.
Okay, got it. So even if it does go back to 550, you are going to have more costs involved in that, seeing as how maybe you're slightly higher risk, but you can always kind of work those down later.
Right.
How you should go?
Yeah, and so it's 580, which was the previous minimum. And yeah, it all depends on what's going on in the market. Sometimes there were additional fees, sometimes there wasn't. Generally when you go under 640, just things get a lot more challenging. Debt to income ratios, which is one of the things we look at for VA loans. So that's a calculation of we look at your income, we look at your debts, we factor the mortgage payment. And with good credit, VA loans allow you to go all the way up to 60%. Pretty aggressive, but pretty lenient and flexible when trying to qualify. That's great. But when your scores are lower, especially below 640, then sometimes the VA won't approve you up to 60%. So your purchase power is going to be less. So there's a lot more reason to get your scores up to qualify, for more.
Sure. What's that compared to, for those people who don't know, compared to normal conventional loan DTI numbers?
Yeah, good question. So conventional loans will max you out at 50%. And we do a lot of FHA loans too, but those have a limit of 57%. So right in between, essentially, the conventional and VA options.
Okay, awesome. And then speaking of FHA, Does VA have private mortgage insurance? Because that's a lot of, that's kind of like a cloud on the FHA that a lot of people think of.
It is, yeah, and it gets really expensive with FHA. I mean, if you're talking about a $600,000 purchase, you could be looking at $300-400 per month in just private mortgage insurance alone. VA, zero PMI, no mortgage insurance to worry about. But it is important to address that there is a funding fee associated with VA loans.
Right, and I think a lot of people aren't aware of that funding fee, are they?
They aren't, and when they are aware of it, a lot of times they're taken aback because it can be a big number, but it can fortunately be rolled into the new loan. And so we have a little piece here that kind of shows the breakdown. If it is your first time use, you'd be looking at about 2.3%. And again, this is a number that'll get rolled into the loan. So $500,000 purchase price, you'd be looking to finance roughly $510,000 or so. And so that's why you take a bigger loan a lot of times, higher than the purchase price loan. It's because of that funding fee. And so it's there. It certainly is a number you have to factor into your budget, but fortunately you don't have to pay it out of pocket.
Okay, really, really good to know. I bet you most people, VA or no VA, do not know that, aren't aware of that. What are we looking at as far as rates right now? I know things are changing all the time, and rates really depend on a lot of different things. People don't understand that sometimes, but what's average VA rate looking like right now?
So yeah, rates are, I mean, I've been in lending since 2001. I've never seen interest rates this low. I mean, we're quoting 2.75, 2.875. If you want to get some lender credits, you could be in the low threes. They're amazing. And actually, there was one additional thing I wanted to mention about the funding fee.
Sure.
If you're active military, then you do have to pay that funding fee. But if you are out of the military and you retired with any kind of disability, 10% or more, you do not have to pay that funding fee. And
great distinction. Yeah.
Right. You can save a lot of money there. You have to earn it, unfortunately, through the disability that but there's benefit from having it.
Well, at least at least efforts are made to take care of people who serve their country. So, and to definitely took risk because of it. So good to know. What is down payment, no down payment? What do we need to know?
Sure. So the no down payment is required for a VA loan. That's great. But what a lot of people don't know about is they still have to save a lot of times or have money set aside for closing costs. And closing costs will generally work out to about 2% of the purchase price. So if we're looking at, again, a $500,000 home, you should expect around $10,000 in closing costs. And so now a lot of times people may not have that, so we have to explore some of the other options available to them.
Right. What are some of those options for people that don't know? That's where we come in, isn't it?
That's where lenders will lean on real estate agents who will either give us a certain look or tell us, thumbs up, thumbs down, or possible or not. But yes, there are ways to have to negotiate essentially the seller to pay for either some or all of these closing costs. Keep in mind, sellers already do have their costs and fees that are customary. So in order for them to pay anything additional, it has to be negotiated. It can, but it's one of the options that we have to explore a lot of times if the seller is willing to do it, depending on the motivation of the seller too.
Right. Motivation is a big factor on the buy and sell side. And then how capable is your agent to be able to negotiate for you and work something out as a closing partner with the other agent and the sellers, right?
Exactly, and that's one of the reasons why we like working with you, because you know how to get it done.
All right. Well, I thank you. I appreciate that. So we talked deposit. Let's talk about those other initial fees like EMD, earnest money deposit. That's the money that we're putting down after we submit an offer. You have a couple of days to do that, but the EMD shows that you essentially have some skin in the game. How does that work for VA?
Yep, that's a great question. So, let's just say you were able to successfully negotiate all of your closing costs and the seller's paying all 10,000. Well, no down payment, no closing costs. That means you shouldn't have to come out of pocket with anything. Well, the earnest money deposit, this is essentially once you have an agreed upon contract, we've opened now escrow, and escrow is that third-party neutral company who's going to be holding funds and helping with title insurance, dispersing things. We still have to tell the seller, hey, we're serious, and here's some money that we're putting in. So the $5,000, let's just say in this example, that you'd be putting up really would just be a temporary thing until you get through escrow and to closing. You can actually get refunded that entire amount back if it was structured that way. And if we structured it for the seller to only cover $5,000, then that would be, the $5,000 that you put in, and you wouldn't be getting a refund or having to put in any additional funds.
That's so good to know. Again, I don't think a lot of people are aware of that. Is there a minimum EMD? Does it have to be $1,000?
Yeah. So the lowest, I think, my experience has been you can go. I think I've even had a client do $500 before. So I think I don't know if there's a minimum. It may be $1. I think it's just something showing the seller we have something in the game. I mean, I've done transactions before where there was no EMD, but it was like a family relationship situation.
Sure.
But obviously, the seller will be a little nervous if we're only putting $1 in for an EMD. So again, that's why I turn back to you as your expert opinion on what do we feel will be enough to get the deal, but not maybe deplete too much funds, even though it could be a temporary thing.
Right, absolutely. I mean, communication with the other side, and again, having someone to negotiate on your behalf and feel it out. I mean, because honestly, I wish you the best of luck right now getting an offer accepted with a very low EMD, unless someone strictly wants to work with a VA person and they're willing to do it. So you just never know.
That's true. It does happen. There's a lot of military presence in San Diego, and a lot of owners have served. So there's, sometimes you never know what you'll get unless you ask.
Right. Absolutely. So we did talk about the funding fee. We talked all about that. So EMD is given for, to have the seller hold some money while you're working out inspections and that kind of thing. So
right.
Appraisal falls in that category.
Right.
So appraisal can be kind of a interesting thing when it comes to VA loans. Can you tell us about that?
Absolutely, yeah. So most lenders are nowadays are designed so that every bank has their kind of number of appraisers that they have on their either a panel or they're using a third-party appraisal company. And so usually there's, it could be 5 appraisers on one company or 10 appraisers. So they're, these are appraisers used to working with certain banks. Whenever you're ordering an appraisal through VA, this has to be ordered through the VA website, and it's then dispersed through, it could be thousands of appraisers in an area. So it casts a wider net, and it's almost always going to be somebody that our bank or me as a loan officer has never worked with before. So they really have designed it to really keep it independent. Loan officers can't speak with their appraisers anyways, but in this case, it's really going to be somebody who we've never dealt with before. And so a lot of times, you may see an appraiser that's maybe more conservative in general. We really haven't seen that lately. Most appraisals that have come in from VA have, for the most part, come in either at purchase price. Sometimes they come in a little bit over. The market has been fairly steady over the last couple months. So, and that process can take, they have up to 10 days to get the appraisal done. So sometimes it's not something that can happen overnight, and it cannot be rushed either.
Right, right. No, we definitely want to give those VA appraisers all the time they need.
Right.
Any appraiser, really. So when an appraisal doesn't come in at the agreed purchase price, VA has a whole other way of kind of dealing with it than than other loan programs. We even have a
Right.
special name for it, don't we?
It is called the
The
Tidewater.
Tidewater.
Yeah, they initiated Tidewater. It happens, a few times a year with us at least, and
Mhm.
it's unlike FHA and conventional. The appraiser gives all parties essentially a heads up that this appraisal is not going to come in at value. So
Right.
back to our $500,000 purchase price, if it's really worth 475, they'll give us the heads up that we can then introduce more comparables,
Mhm.
maybe more information that the appraiser didn't know about. Really our time to put things forward to try to, maybe help bring the value in, or maybe the buyers don't want to do that and maybe think they can negotiate a lower purchase price. So it can work in the buyer's benefit.
Right. And it can work in their benefit. And you can also have a situation where, the market's kind of demanding that increase. And if you have the agents working together to
Mm-hmm.
help justify that price, then, it can be reconsidered. And once in a while it can be changed, I hear.
Absolutely, yep, and we've been successful in that too. So it's all, you want to keep all your options open, and the other thing the appraiser does also is he's also, or she, a half inspector. So they're also going to go through that property and go through things. They're really looking for safety, health issues. If there's some termite work. So it's really not just a valuation. It's really kind of part of what a home inspector will do. They're going to check out a lot of those items too.
Right. And before we talk about, speaking of inspections, the termite process, I want to mention Tidewater, you used to have to I think you have to disclose, right?
Right.
That you have had a Tidewater. However, if that deal falls out and you start over, you don't have to disclose that amount to the next party. So
that's
that's
a really good point.
Yeah. So anyway, fun stuff. So termite, while we're in the inspection period of this, termite, we need a Section 1 clearance for VA loans, correct?
That's true. Yep. So Section 1 essentially is, something considered that really is serious. So there's some, serious, wood damage or termite that really needs to be fixed. A VA loan will not allow to be closed unless Section 1 work has been cleared.
I mean, overall, we're talking about health and safety, right? So,
Right.
so anything major is going to get called out, is going to want to be addressed. So that makes total sense there. Anything else we need to know about the termite? What's the Section 2 clearance business all about?
Yeah, Section 2 is just, if the appraiser may note it, but it's been deemed, it doesn't, like you said, pose a safety or health issue, and so they may make comments about it, but it's, the underwriters or VA isn't really going to care about. One thing to note too, California is one of the unique states that allows the buyer to actually do the work to get the Section 1 clearance completed. So that, Section 1 clearance can really be a wide, cast a wide net from, it could be thousands of dollars to a couple hundred. And if there's a negotiation issue, but the buyer is willing to do the work because, they feel they can or want to, then it's certainly allowed.
And that has to be completed before the close, I would assume.
Correct. Yep. So they're certainly taking a risk in either putting up money or time. Last year, I had a guy who he was pretty handy, so he went and spent a few days, and he got the place fixed up best he could to clear that Section 1, and he's a happier homeowner for it.
Yeah, that's awesome. And if you have, hey, your brother's in the termite business or construction business, you take it on, right?
That's it, right? Get a little sweat equity before you own the property because it'll be in your benefit.
I love it. I love it. So, That's most of it, but when we're talking about the process, what's our time frame here? It used to be, people would say you can't get a VA loan done without 45 and sooner than 45 days, right? Well, how fast are you able to do them now?
Yeah, no, we're cranking them out. I mean, 30 days, no problem. As long as all parties are on board, we can certainly get somebody closed fairly quickly.
Yeah, that's so good to hear. And especially if time is of the essence and, people are moving, in from out of state, like a lot of times I'm sure happens with VA.
Right.
Do you see, just a quick question, do you see a VA used more times by people moving in or people that are currently in San Diego, or is it kind of like a even mix?
Yeah, I've seen most of the time it's for people that are kind of, they've been in San Diego, they kind of know where they want to be, and so they've been either paying rent or whatever, and they're just kind of like, I think we're ready at this point. We know the area, but it's certainly not uncommon for somebody to either use their VA again. I mean, I've had dozens of veterans who have, or even active military who have just been, every time they're stationed somewhere else, they've purchased a home, and so they've accumulated several real estate properties just in doing that. It's great.
So you bring up a really good point there. You can use your VA benefits more than once.
Yes, very good question. And so there's a formula. You can actually technically have two VA loans at the same time.
Oh, wow.
We call it second tier entitlement. Now that's easier for it to have. I had a guy who, he had used his VA in Texas years ago, had a small loan. I think it was less than $100,000, and then he wanted to buy another primary residence in Nevada. The math works out easier on smaller loans.
Oh, sure.
Not so much when if you're buying a $500,000 California property and then maybe another 700, you're probably going to be already maxed out on your entitlement.
Gotcha.
So the solution a lot of times is, if you have enough equity, you can convert that loan to a conventional loan, and then you've essentially freed up your VA to be used again.
Awesome. And I'm sure a lot of people weren't aware of that as well. That's really good to know and really good to share, so you can use those benefits and grow your wealth for you and your family for your future. Right,
exactly. Yeah. Absolutely. Great way to do it. And one thing to keep in mind, though, is it does get more expensive on the funding fee if you're using your VA a second time, until you can see the subsequent use with no money down. What the VA is essentially saying is, hey, you're using this again. It'd be nicer if you had 5% down. It'll save you a lot of money, because then the funding fee is only 1.65 versus no money down, subsequent use 3.6. As you can see, now we're in the $15,000 to $16,000 range on a $500,000 loan.
Right. Wow, so good to know. So much information. This has really been so valuable. Sure. Unless you have anything else to add, I think we covered pretty much anything.
Yeah,
everything.
One piece I think we left out. We get asked a lot. Oh. Can somebody buy a VA? Can somebody use a VA non-spouse?
Right. Very good question.
As a co-borrower, and the answer is yes, but will require a 12.5% down payment. A non-spouse co-borrower, and so that a lot of times defeats one of the benefits of the VA loan of going in with no money down. So it's possible. It's just not usually as advantageous. Right,
but that's a great option for sharing the wealth, I guess.
Right, and no PMI, so you'd still be better off with that VA loan versus. So if you can't do it, certainly, it's worth looking into.
What's it take to refi out of VA into conventional?
You really only need 5% equity.
Okay.
And then you could essentially, now that new loan will have private mortgage insurance. So obviously in a perfect world, you'd be at 80% so that you can avoid PMI, but it may still be worth picking up that small PM on a conventional loan to open up the VA, depending on your motivation.
Sure, and depending on your location too, I guess.
Exactly, yep.
All right, well, thank you so much, Ron, for your time and all of this. I hope we really are providing some value to some people. And if you are watching this and you would like to get some of those screenshots that we were sharing, we do have flyers and information we'd love to share with you. Again, Ron, thanks so much for your time today.
Thanks so much for having me. I was glad I was able to help.
Oh my gosh, you're a wealth of knowledge. Thank you so much. And yes, so if you are watching, your call to action would be to request the information from us if you like, or reach out for a conversation. Our information will be shared along with the video, and we hope that you're all doing well, and we talk soon.
Okay.
All right. Thanks, Ron.
See you guys.